Joining us now, Fred McClimans, partner and head of equity research at Sumidi Research. He's also a contributor to Seeking Alpha. Let's take a look at the IPO market. DropBox recently secured $600 million in credit in a round led by JP Morgan. Does this position affect the file storage IPO market in the near future, in your opinion?
Well, this is a very interesting IPO and a very interesting development if it actually comes to pass here. Dropbox, they've opened up a credit line of about $600 million on the heels of a prior credit line that we believe they really didn't touch. It expired. They were able to negotiate better terms. And this really does, though, set them up for what could be their second attempt at an IPO after an aborted attempt back in 2014. If this really is successful, and we think it could be, this really could open up a new aspect of the IPO market here.
Okay, Cloudera, am I wrong to mingle that, or do you put that into this, and what's your read on that IPO?
So, Cloudera is a very different type of beast here. Just like Dropbox is different from Snap that just IPO'd recently, Cloudera is different as well. The best way to think of Cloudera is they're one of those data science applications, companies out there that literally take all of the information that we generate on the digital web and crunch that. It's all about data analytics. It's all about finding the right answer. Now, interestingly, Cloudera, they've been around for a while. They have an investment from Intel. Their valuation, we think, is going to be right about what their valuation was 4 years ago at the Intel investment. But they're repositioning themselves less of a database and a data analytics company and more of an AI or machine learning company. And that's really an important shift in the marketplace as companies go from collecting and analyzing data to really trying to generate some really meaningful insights and actionable decisions out of that data.
Fred, many people expect this year will be the year of the enterprise software IPO and even some big private investments as well. Of course, in years past, we've seen it be the year of biotechs, of MLPs, of other energy stocks, whatever it may be. Software as a service was hot for 1 year, might continue to be hot this year. If you're one of these enterprise software companies, what is the pressure to get out at the same time as most other companies in the industry are doing that?
That's a great question. If you look at the IPO market, it's been very trendy, over the past decade. And there has not been a lot of activity in the tech space of late. So the fact that we see this opening up now, I think will definitely put pressure on some companies that have been sort of testing the waters or perhaps holding off for a better time period. And I think Dropbox is probably a great example of that. They had the opportunity, they pulled back. They're very close to profitability, and of course, they're we believe free cash flow positive at this point. They are, if they go public later this year, they're going to set a very high bar. But for enterprise software companies, yeah, definitely, Dropbox fits that space. Their base of about 500 million commercial or consumer users has about 200,000 business users that are really hardcore into the enterprise collaboration space. And if we can demonstrate, or if they can demonstrate that the market is really looking for that right now, I think there are a number of plays that could open up later this year.
What about Carvana? Is this a tricky time for this company to go public? Of course, this will sell you used vehicles, as John mentioned, straight from a vending machine almost. But for a market that is seeing what many people expect to be the tip in terms of auto sales, and then obviously the proliferation and the research and the funding going toward autonomous vehicles, has the time passed, the sweet spot passed for this company to go public? Maybe 2 years ago was the right time? Or how do you think timing and market conditions will weigh on this IPO?
Well, with Carvana, I mean, what's not to like about a company that sells cars like Pez dispensers? What this really does is it demonstrates the value of software and the internet and the ability to literally stand up a business that does things today that we could not have done 2 years ago. And I think that's an important point with Carvana. 2 years ago would have been too early. I don't think the market was ready for this type of a business model. Today, I think the market is more ready for it. My big concern is there are some other competitors in this space. This is really, a way of removing friction from that sales process and making it as easy as possible.
I think buying a car is nearly impossible, and it's to your point. Fred, I mean, it's a question of whether it's still too early or it's the right time, a bit like the music space. I mean, there's a lot of bodies that have been buried in this like more efficient way to sell cars type thing. Like was BP the one that hit issues and went out of business?
Yes, BP, yes.
Yeah, I mean, so there's like been so many of these that have like struggled at this point, but it's an idea whose time will come, I think.
Yeah, I think it's here. The biggest challenge I think they face is this is a marketplace that would be ideal for somebody like Amazon, who excels in sliding into adjacent markets to move into, over the next 12 to 36 months.
But Amazon's also highly acquisitive, and this could be the kind of thing where it goes public, and within 6 months, Amazon takes it.
It might very well happen.
All right, Fred, a pleasure to have you on here. How do people easily get to your stuff on Seeking Alpha?
So you can find us on Seeking Alpha at Samadhi Partners. We offer the Perspectives on Tech service for Seeking Alpha. And you can always find me on Twitter at fredmcclimans.com.
All right, man.